I'm Safi Russell from SDR Consulting Inc., and we're here today on Business Basics Friday. The goal of this session is to provide some value to small business owners in the space of tax, accounting, and general business, and then have an open Q&A at the end.
Once again, happy Friday, everyone. Welcome to Business Basics Friday. I am Safi Russell. If you're here live, go ahead and share in the comments below where you're joining in from. It is January 6th in New York. It's going to be 44 degrees today. And so go ahead and share where you're joining in from live in the comments if you're here on Facebook or if you're listening in on Clubhouse. So I'm Safi Russell, founder and CEO of SDR Consulting Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners. We have a variety of guest speakers that come in and help share information to help educate you on the many areas of your business or practice that you manage. This is just information, education, for information education purposes only. No client relationship is being established and no specific advice for your situation. And we are not liable for any use of information provided today. So as far as my background, I've been in the industry 20 years. I'm a CPA and enrolled agent, have a master's in taxation, and SDR Consulting Inc. is a virtual firm based in New York, but we do work with clients all over the US. And we mostly work with business owners, especially mental health professionals, to help you reduce your concerns regarding tax and accounting so you can focus on growing your business, your practice, focus on your clients, as well as your own well-being. As you have questions today, we will answer them at the end, time permitting. So go ahead and put them in the Facebook comments or here in the Clubhouse chat, and we will open up for Q&A at the end. So today it's great to have our guest speaker today. I want to thank him for taking time to meet with us today. And we have attorney Scott Horton to cover the topic of costly worker classification mistakes. So Scott, the floor is all yours.
Thank you, Safi. So I am an attorney in the Buffalo, New York area, specifically Orchard Park, New York. I represent clients throughout the state of New York and clients, businesses that are located elsewhere but have one or more employees within New York State that they need guidance on the specific New York State issues that arise. So I do just represent employers in my practice, so I don't represent individual employees. And over the years, I've represented at least 400 businesses, specifically in the area of labor and employment law. I'm going to go ahead and share my screen because I have a presentation that I will be going through today. Okay. So hopefully everyone can see my slide on costly worker classification mistakes. Again, my name is Scott P. Horton, and my firm is Horton Law PLLC. What I want to start with is the big picture question: why does worker classification matter? I realize we haven't even addressed exactly what worker classification issues I'm referring to, but it really doesn't matter. The big picture, as in many cases, comes down to money. Excuse me. So for many reasons, there are monetary implications of how employees are classified, and the very question of whether an individual worker is classified as an employee in the first place is perhaps the first threshold. A few questions that we're going to keep in mind in this presentation start with: whose interests are at stake? Well, obviously the employer and the worker. Here I use the term employer generically. It may or may not be an employment relationship. It may be a contractual relationship between a business and an independent contractor, for example. And that's the first classification question that I want to discuss. But regardless of who is doing the work and who they are doing it for, of course, there's always some taxing authority that has an interest in that work being done for one or more reasons. For our purposes, we're most principally thinking about employment tax reasons, but there could be other tax issues involved as well. And if the taxing authorities have an interest, then that ultimately means it has an impact on the taxpayers and the tax base generally. And there are also interests from the insurance companies that companies work with, because, for example, you have workers' compensation insurance to cover your employees, but probably not to cover, in most cases, people who are independent contractors working for your business. In those cases, your workers' comp carrier might have some interest in how you are classifying individuals, specifically for the threshold issue of whether you should be paying premiums based on those individuals, and potentially for liability reasons down the road, whether those carriers and their policies will apply if a particular worker makes a claim. There, it may depend again on whether they are classified as an employee or an independent contractor. So again, this is the first big classification question that I want to address. I'm not going to be able to give you a foolproof roadmap for every case, but I want to give you the lay of the land and then what I look at as the key questions in making this determination. So what do we mean when we say an employee? By default, we mean that the employer has more control over what and how the work gets done than they would if they've just hired an independent contractor. There are a lot of details to that. It may include controlling the physical premises where the work is done. It may include controlling the equipment that is used. But again, there's no clear 1, 2, 3, 4 factors that decide how much control is sufficient for an employment relationship to exist. But all else being even, the employment relationship features more employer control than an independent contractor relationship most of the time. Employee compensation is usually based either on an hourly rate or a salary, or sometimes a commission structure, usually with or without bonuses attached to all of the above. The employer is obligated to withhold and deposit income, Social Security and Medicare taxes, potentially others. And in some cases, they have to make withholdings for certain insurance coverages, such as unemployment insurance. They may also be withholding and providing health insurance, retirement benefits, and those sorts of things. And then at the end of the year, the employee receives a W-2 that reports various information, and that information is also reported to the government, probably including the state and federal government, and in some cases, local entities as well. On the flip side, an independent contractor is an arrangement where the hiring party, whether you want to call them the employer or not, has the right to control or direct only the result of the work, not as much of the details as to how the work gets done. An independent contractor usually would have more discretion as to how they're actually getting the work done. They may or may not be using their own equipment in their own premises, but usually there is, again, greater control on the contractor end than in the employment relationship. Again, what that means is going to depend on some various tests that have been set up for different legal purposes that I will mention momentarily. The compensation for an independent contractor usually is in the form of a fee, however that is described, but a fee as opposed to a wage. And if you are paying independent contractors wages or salaries with those terms, then that is going to raise an initial red flag. So you want some sort of fee arrangement for your independent contractor. For example, as a lawyer, if you were to hire me, you may be paying me an hourly fee. You would not be paying me an hourly wage. Your payments to independent contractors are not reported on W-2s, but assuming they meet the applicable threshold, they would be reported, or should be anyway, reported on Form 1099s. And again, those go to the contractor and to the government taxing authorities. The independent contractor is typically not going to be eligible for benefits like employees would, and the independent contractor should be responsible for their own taxes and insurances. So again, why do the taxing authorities have an interest in this? Well, because there are some employment taxes that they would prefer to get paid sooner rather than later, and typically getting them paid from an employer as withholdings is going to get them the money faster. And it also is more likely in certain cases that a corporation or a sophisticated business entity is going to pay all of the proper taxes and make the proper withholdings, whereas certain independent contractors, either intentionally or unintentionally, may not be as diligent as bigger businesses in reporting and paying their taxes. So we're not going to spend a tremendous amount of time in the details of the various tests that are out there, but I just want to paint the picture that if called into question, the employment versus independent contractor relationship may get analyzed under one of various tests that have been established for different purposes. In any given state, there may be state laws that apply and tests and factors that apply in that particular state for certain purposes. There are federal tests that apply for different legal purposes. So the IRS may apply one test, and the Department of Labor, in a case involving minimum wage and overtime considerations, will apply a somewhat different test. So I don't really try to focus too much on what specific test applies and what exactly the factors and analysis should be under that particular test in the situation where we're trying to make the classification up front. Certainly, if you were challenged on a classification by a particular entity or under a certain law, then you would need to look toward that particular test at that point. But by that point, you're generally already in a position that you didn't want to end up in. But I'm going to take a quick peek at what these different tests involve, just so you have the background. This common law test is one that I think the IRS generally is applying now, and loosely falls into these categories of behavioral control, financial control, and the type of the relationship. Each of those has many subcomponents. The IRS historically used a 20-factor test, and most of those factors now can also be found in one of these three components. But in the whole, it's a totality of the circumstances type of analysis. There's no one factor that makes or breaks the classification. There's this economic realities test, which is the one that the U.S. Department of Labor is currently proposing to use. This considers many of the same factors that you would find under the common law test. Some of them are listed here just for your reference. For example, investments by the worker and the employer. If you have, as a worker, established your own business and bought your own equipment and are really in business for yourself, and you're doing job for a particular business entity, then it's likely that that's an independent contractor relationship. If you are just the average individual who holds jobs and then one day gets work for someone who says, we want to hire you as an independent contractor, here's all the tools, equipment, workplace, and rules and procedures that you need to follow, then it is more likely that that becomes an employment relationship. Again, nature and degree of control is something that is considered. One factor that really demonstrates an independent contractor relationship is the situation where the business that hires the contractor doesn't even insist that that individual person is the one doing the work. They're just hiring a individual or business with the idea that somehow that person or business is going to get the job done. And if they want to hire and pay other people to do the work for them, then that is fine. There's a 5-factor test, and this is the one that is currently in place under the Fair Labor Standards Act, but is not really favored by the current administration in Washington. the 5 factors here don't look that much different than some of the other things that have been considered under other tests. The distinction here is that this 5-factor test gave specific prominence to the first 2 items listed, the nature and degree of control over the work and the opportunity for profit or loss. The idea being that by focusing, giving more weight to those factors, you'd be more likely to support a finding that a relationship is an independent contractor relationship. But again, no one factor is dispositive. This 5-factor test just gave a little bit more weight, whatever that might mean, to the first 2 factors. And then finally, although there's probably other tests out there, the other key one that I wanted to reference is what's known as the ABC test. ABC doesn't actually correspond to anything as far as the alphabet goes. It just happens to be, usually a statutory test. So this is section A, section B, section C. Of course, it could be section 1, section 2, section 3. But if you hear ABC test, this means that there is an applicable law that flat out says you have to meet all 3 of these requirements in order to prove that there's an independent contractor relationship instead of an employee relationship. So key thing to keep in mind is the default from most legal standpoints is always going to be that a worker providing services is doing so as an employee, but you may be able to prove that it's an independent contractor relationship, not an employment relationship. Where an ABC test applies, I think generally in Massachusetts, for example, and in some other states, and in New York, for example, it applies in the construction industry. And I know California has had some big issues about ABC tests, including in the transportation industry. But this is a very restrictive test that is going to make it very hard to find that someone is an independent contractor. So basically, the work has to be different from the work of whoever the hiring entity is, and the worker doing the work should be involved in an independent occupation, profession, or business. So what I like to think of is if you're building a house and you bring in a plumber to do the plumbing work in the house, then it's going to be harder to show that that is an independent contractor, because part of building the house is putting in the plumbing. Conversely, if you just have a company that runs websites and they do it through computers in an office, and you need to hire a plumber to come in to do the work in your office because the toilet's not working properly or the sink is broken, then that plumber is likely an independent contractor because you aren't normally in the business of plumbing. Okay, so those are some of the tests that technically get applied, but I want to get down to my practical analysis. Again, this is where we go when we're trying to decide up front or when we're reevaluating our classifications in a workplace. Okay, well, is this person an employee, or can we properly treat them as an independent contractor? So the first question, although these are not necessarily in any specific order and they're not necessarily better than other questions you might come up with, but I think they're helpful, is the person in business for themselves or him or herself? The requirement that someone hold a business license or be incorporated or have their own LLC doesn't generally exist under any test, but it usually is a helpful factor in proving an independent contractor relationship. Certainly, it's perfectly legal to have a business that you own as a sole proprietor or a partnership that may or may not be registered as a limited liability partnership. Any of those types of arrangements, could still satisfy this question in a way that suggests there's an independent contractor relationship. Obviously, the average employee is not in business for themselves. They have a job and they work for that single employer. Which brings me to my next question. Does the person offer to provide their services to others? Now, you don't technically have to be serving multiple clients to be an independent contractor. Obviously, you may, as an independent contractor, wish you had more clients and just for whatever reason not be able to get them. And there are some projects that you might do as an independent contractor where you wouldn't be able to simultaneously be working for soliciting business from other companies. That doesn't necessarily mean you can't be an independent contractor. But again, if you're classifying someone that you're doing business with as an independent contractor, you should really look at, well, is this a type of person that's out there offering these services generally to other businesses like me? So if I need to bring in a plumber to fix the pipes, or if I need to hire a lawyer, then they're probably providing the same services to as many other clients as they can get or handle. But if it's just someone who is coming in to do some filing for you in the back office, or to run a sales project or something like that, then, it's really important to say, well, is this the type of, special service that this person provides generally, or is this just something that I'm hiring them to do for me, in which case they're more likely to be an employee. And here's a final question that I find really practical if people are willing to be honest about it. Why not treat it as an employment relationship? Again, the employment relationship is almost always the default. So, I think you should really ask yourself, why is it that we wouldn't treat this as an employment relationship? And how good of an answer is that? Sometimes it's just, well, this person doesn't want to be a W-2 employee. Okay, well, why is that? If the answer is they're not going to pay taxes and are trying to avoid their tax obligations, then that should be a red flag. If it's that, they want to be able to do work whenever they want and for whomever they want and with their own equipment and at their own place of business, then obviously these are factors that look more like an employment relationship. The other thing I see come up a lot is employee retires from a company, and then the company says, oh, but we still need you to consult either on a transition basis or indefinitely. So we're going to hire you as an independent contractor. Well, I don't generally find that to be a great reason to avoid an employment relationship. That person probably isn't generally putting themselves out and setting up a business to do that type of consulting. So you're just kind of avoiding the nicety of, well, they retired and now we don't want them on our payroll anymore. Usually isn't the best justification for independent contractor classification. So I think the last thing on the independent contractor piece is, if you're going to have an independent contractor or someone that you are going to contract with who isn't going to be an employee, I think it's important to actually have an agreement, a written agreement with that person stating that it's not an employment relationship and that it's an independent contractor relationship. I mean, depending on what it is, again, if you hire a plumber, you don't need to necessarily specify that, but the closer of a question it gets, the more important it is to have an agreement that demonstrates the realities. It's not enough just to say it in the agreement, but it doesn't hurt. And then you can spell out things in the agreement that will, again, support the independent contractor classification, such as explaining that there's a limited duration to the relationship and explaining how the independent contractor has control over the services. Again, in some cases, ideally meaning they can hire their own staff to help them perform the work, or they can provide their own tools, or, really as much as you can do to show that we just want X to be done by a certain point in time, and this is how much we're willing to pay for it. And go at it. The closer you get to that and document that and have that be the actual reality, the better chance you have of proving an independent contractor relationship at the end of the day. Just a couple quick other classification categories that I wanted to cover, and then I want to just go to overtime exemptions to wrap up. So students and interns, you could theoretically think of these people as independent contractors, and maybe they actually are independent contractors in some cases. But the question here is there a scenario where a student or intern is not an employee? And for-profit businesses generally have to pay employees for their work. So just saying this person is in school or we want to call this person an intern doesn't necessarily avoid the classification of employee and the requirements that go along with that. But it is possible that students might not be categorized as employees if, for example, they are really doing work that doesn't help the business make more money, but it gives them the opportunity to learn and gain skills. So this is where the FLSA has a primary beneficiary test. So the question is, who's really the primary beneficiary of the relationship? Is it the employee or, I'm sorry, is it the employer, the company, or is it the student? If it is the student, then under applicable situations, you can avoid an employment relationship and therefore, for example, don't have to pay the student. There are many state law distinctions on this, so be careful at what the requirements are in your state as well. On the flip side, there's some category called volunteers, which really is only cognizable for nonprofit organizations, including government entities and private nonprofit organizations. These types of companies can employ people, but they can also have unpaid volunteered workers. The FLSA allows the exception to the definition of employee for voluntary work for public service, religious, or humanitarian objectives without contemplation or receipt of compensation. So again, a key distinction here does become whether the person is paid or not. Once they are paid anything, they more likely would be considered an employee, at which point they probably then have to be paid minimum wage, would be entitled to overtime and other such requirements. And employees of nonprofits can volunteer to do completely different types of work for their organization, but you can't just have an employee volunteer to work overtime without pay, doing the same type of job they normally get paid for. All right, now just a couple more minutes that I wanted to discuss the topic of, okay, once we accept that someone is an employee, are they exempt or non-exempt? And this is from minimum wage and overtime purposes. Principally overtime purposes, most people end up getting paid minimum wage, but most of the exemptions technically do serve as exemptions from minimum wage and overtime. So what is the key distinction here? Non-exempt employees must receive minimum wage for all hours worked and must receive overtime at time and a half for hours worked beyond 40 in a week. This is the basic requirement of the FLSA and most state minimum wage and overtime requirements. There may be some distinctions in certain states that require overtime in different scenarios, such as for working more than 8 hours in a day. And you may have contractual arrangements, especially if you have unions and collective bargaining agreements that require overtime in other situations. But this is the general statutory requirement under the FLSA. If someone is exempt, then they can be excluded from minimum wage and or overtime requirements. Technically, there are some exemptions that apply to both minimum wage and overtime, and others that just apply to one or the other. You will see, though, however, that most people who meet the criteria to be exempt from overtime are pretty much necessarily going to receive minimum wage anyway, but technically they would be exempt. Key point is that it's always the employer's burden to prove that an exemption applies. So the default, again, is non-exempt unless the employer can prove the exemption, and employees can't just agree to be exempt when they don't actually meet the legal criteria. Okay, so absolute biggest no-no here is you can't assume that all salaried employees qualify for exemption. There is no exemption that I'm aware of that is based solely on receiving a certain salary or being salaried generally. there's always a duties responsibility or some consideration of what the job itself actually is. So job duties always matter. There might be a really rare exception under some state law somewhere, but for the most part, there's always at least some relevance of what the job is in addition to how the person is paid. Under the FLSA, white collar exemptions typically have both salary and duty requirements. They all have duty requirements. Not all of them necessarily have salary requirements. The current federal salary threshold is $684 per week. There are state laws that might have different requirements and in particular different salary thresholds. New York has a salary threshold now of over $1,000 per week throughout the state. I think Washington State is up to roughly $1,250 some dollars an hour. So again, several states are above the federal threshold and many employers are subject to both. So make sure you don't just satisfy the $684 requirement if your jurisdiction sets a higher bar. Any deductions from a salary risk destroying the exemption. So usually if the person works fewer hours than you're hoping in a week or takes a day off for various reasons, you can't deduct from their salary. The salary is supposed to be a true salary, meaning this is how much you get each week, no matter how much you work. There are specific deductions that are allowed. For example, if someone is suspended for disciplinary reasons or has run out of sick time under a bona fide sick time policy. But if you do make improper deductions from a salaried employee, you risk losing that exemption, not only for that employee, but for other employees in the same position as well. There are some other nuanced industry specific exemptions out there under federal and under various state laws. So you might apply to one of those in certain situations. But generally, when we're talking about exemptions, most people are thinking about these white collar exemptions, the administrative, executive, professional, and outside sales exemptions. Of these, the outside sales exemption is probably the least applicable, but I will note it doesn't have a salary requirement, but it does require that this person's job primarily consist of performing sales and doing it outside of the workplace, where workplace includes not only an employer controlled office or facility, but also the person's home or potentially a coffee shop where the person is working remotely. So outside really means they have to either be at a convention or trade show or on site with customers or prospects a good percentage of the time. A lot of people get tripped up on that. As far as these other exemptions, the administrative exemption and the executive exemption are kind of misnamed in some sense. The executive exemption, for example, doesn't necessarily just apply to executives in the sense of vice presidents and CEOs and that sort of thing. Executive exemption applies to anyone, potentially applies anyway to anyone who manages 2 or more individuals in a particular segment of the business. So it's really more of a managerial exemption than anything. The administrative exemption, on the other hand, is what is equally or maybe more likely to apply to some executives. But the administrative exemption can cover certain HR folks and marketing folks, types of people who have significant discretion and responsibility for certain aspects of a business. All of these are non-manual office types of exemptions. And the third major white collar exemption is the professional exemption that applies to people who are either learned professionals or creative professionals. So some artists, designers, and that type of thing could qualify as professionals as long as they're engaging in creative work with enough independent discretion into what their work product will be. The other types would be the doctors, lawyers, accountants, and teachers, people who've been to school and gotten specific credentials, usually licensing, to hold that type of position. Most the administrative, executive, and professional exemptions have those salary requirements under the FLSA, and there is a limited exception for doctors, lawyers, and teachers who have no salary requirement as long as they're actually working in those functions. So it is theoretically, technically possible to employ a doctor or lawyer and not pay them anything. Same with a teacher, although usually that doesn't happen because those people typically aren't willing to work for free. And I know I can speak for myself. So with that, I just wanted to quickly throw this up so I have it on the slide. You can follow Horton Law on LinkedIn, where I post updates on employment and labor law. There's the link, but just look for Horton Law on LinkedIn. And Safi, I'll turn it back over to you here, but here is my contact information if someone wants to reach out to me, and I'll be happy to answer any questions, Safi, that you have or that anyone else has to share. But if someone wants to follow up later, I can certainly speak to them that way as well.
Perfect. Thank you so much, Scott. That was a lot in a little bit of time, and I know that was valuable information that you took the time to share. So what I want to do is I do want to have you go ahead and just share your contact information for those who are just listening in and not here on
Sure.
the visual, and then we'll open up for Q&A afterwards in case anyone has to run. So if you can share how people can reach you, that would be great.
Yep. So again, the firm is Horton Law. So you can obviously search for Horton Law and I'm in the Buffalo area, but the website is hortonpllc.com. So HORTON PLLC as in professional limited liability company.com. My phone number is my email is scott@hortonpllc.com and my phone number is 716-508-7748. Also look for me on LinkedIn at Horton Law or Scott Horton. Happy to connect with you there as well.
Perfect. Thank you so much for that. So I want to go ahead and share a question that came up, and then I want to share some comments as well. And the question is now, just keep in mind that we can't necessarily give you a yes/no answer. This is not an official consultation, but any guidance that you want to share, if any, Scott, would be great. The question is, as a single member LLC, would I be considered an independent contractor or employee? And then the second question is, and can LLCs technically have employees?
Well, ironically, conveniently, I'm a single member LLC, or my firm is a single member LLC, and I'm not an employee of my LLC. There are some state law distinctions on this occasionally, but typically it's easy enough if you're a single member LLC. For most purposes, you don't need to be considered an employee. You're not expected to pay yourself minimum wage, for example. Hopefully you can. But don't worry if you can't. It gets trickier when you have multiple member LLCs as to who can qualify as an owner versus an employee. But yes, certainly to answer the other part of the question, certainly LLCs and single member LLCs can have employees. I have employees, for example. There's no reason you can't do that. I don't know, Safi, if you had any further comment on that. I know you have experience in that area as well, I'm sure.
Yeah, so definitely, you're right. LLCs can have employees. Sole proprietors can have employees. You don't have to even have a business to have employees as long as you're in business. On the question regarding the independent contractor or employee, so there's two ways to evaluate that, and Scott answered one of them in that no, you're not an employee of your own company, and you're not a contractor of your own company. You're just the owner. So please don't pay yourself as a W-2 from your LLC, and please don't give yourself a 1099. Now, also, does that mean if you can be an employee or contractor to someone else? I think all the factors that Scott went over is going to determine the answer to that. So that person that you're going to potentially contract for or work for needs to go through the different factors and see if you meet the criteria. So even if you have an LLC, I don't think that's the only determining factor of whether you can be a contractor or employee, especially if you're a single member, because it's technically disregarded, in IRS's view anyway.
No, that's absolutely right. You're right. I was answering the question in the sense of are your own employee, but could you still be someone else's employee? Sure, you You can own multiple LLCs. You can own LLCs while you're clearly employed by another company doing something that's totally unrelated to what any of your LLCs do. Certainly having an LLC and being a sole member LLC would be a factor in the analysis if your LLC is contracting with another company, but it's by no means the distinguishing factor or
Right.
a determinative factor.
Right. By itself, definitely. All those factors are important. Excellent. So I hope that answered your question. Thank you for that on Facebook. So what I want to mention is the reason why I've been stressing this so much is that I see a lot of businesses, especially in the mental health profession, where many people are set up as contractors, and it's all good until there's an unemployment insurance claim, right?
Right.
Because a lot of times, whatever was used to make the decision of whether they should be an employee or contractor, that's one thing. It becomes an issue when that person leaves, or if there's a relationship issue, there's drama involved, and now they think they were an employee or that they should have been an employee. They go file an unemployment insurance claim. Now the Department of Labor comes in and starts looking at those factors that Scott mentioned, and starts looking at the hours they worked, if it was tracked, were they subject to overtime or not. Then you have the unemployment insurance, and you have the federal and state taxes that should have been withheld, then you have the FICA, employer and employee contributions. So the penalties, which I've discussed in a previous training, you can catch the penalties that a company can be assessed for improperly classifying the employees or contractor is extensive. And so you want to take it seriously. When you're looking to expand your practice, you want to work with a professional, a labor attorney, an HR specialist, to make sure you have all your paperwork in place and that person is properly classified. It may not seem like a big deal now, but it can be later on. And so the second part of the question is, to clarify, LLCs can have both employees and independent contractors. That is correct. Yeah. So LLCs, corporations, sole proprietors, any of those structures or independent businesses can have employees and contractors. There's not necessarily a restriction on that. All right. Any other questions? Let's go ahead and pop that in before we wrap up. One other comment I wanted to make was that, speaking of deadlines, so today's January 6th, and the 1099 NEC forms for contractors and the W-2 forms are due January 31st. And so if you had any employees at all last year, any amount that they earned, they have to be issued a W-2. And if you had any independent contractors who earned more than $600 last year in 2022, and they're not corporations, and you didn't pay them through an invoicing platform with a merchant account type of situation, then you likely need to issue them a 1099. You need a W-9 from them in order to have the information needed to file the 1099. That is something you should get upfront. So in your hiring process, whether they are employee or contractor, there's paperwork for employees, a lot of paperwork, right, Scott, that you should have in your employee file. And then there's also paperwork you should have in your contractor file. Like Scott mentioned, the independent contractor agreement, a W-9. This way you're not scrambling right now trying to get W-9s to meet your filing requirement. So I wanted to throw that in there from the tax and accounting perspective. And then the last thing I wanted to mention, which was great, was not great, but restrictive, that ABC test, because I've heard about it.
Yeah.
And I think I've heard about it more from California, but as Scott mentioned, every state is different. Scott focuses on New York. You want to make sure you're working with an attorney who covers your state, so they know the rules of that state or the state that you have staff at. In this virtual world, you could be in Nebraska and have employees or contractors in New York, right? And so you want to make sure you're working with attorneys in the appropriate states, as well as tax professionals who are clear on some of the criteria for compliance purposes. All right, so if there's no further questions, Scott, if you want to add anything, feel free.
I just wanted to follow up on that last point you made real quick. We really are seeing more focus on employees who work remotely in different states. I mean, really before the COVID pandemic, I think it happened, and a lot of cases, nobody was too worried about it. but now the various agencies are more interested in saying, well, you didn't provide New York workers' compensation, or you didn't pay into New York unemployment for this one employee you have working in New York, even though you're based in Texas or Utah or wherever. So we are seeing more crackdown on that. So unfortunately, there's more regulatory obligation there, and compliance obligation, but it is something that I would advise people to be more conscious of than they were, 2 or 3 years ago.
Yeah, definitely. Someone said great information. Thank you for that feedback. Yeah, and it's interesting in New York, and Scott, correct me if I'm wrong, but in New York, when we're talking about workers' compensation, if you have a contractor who does not have their own workers' comp insurance, you as the person hiring them, I'll use that in loose terms, is supposed to cover them under your own workers' comp policy. Is that
Yeah, I
correct?
mean, it's certainly the best practice, whether you can get away with not doing it in certain circumstances. But again, if you're hiring a law firm or a plumbing company, then you're probably not asking them, do you have workers' comp coverage? But if it's, something less established than that, and working with somebody who's basically an individual, whether they're a registered LLC or incorporated or something like that, or just a sole proprietor or whatever, then it certainly should be a question you want addressed up front, because one way or the other, if that person gets hurt,
Yeah.
you'd rather your workers' comp coverage cover it than suddenly not have coverage and then face a claim, in which case you wouldn't necessarily have the limited liability.
That's true. That's a good point too. Yeah, I had a client who New York State came to their home, New York State workers' comp, specifically related to this. And it was pretty intense, but everything worked out. But they're looking for it. They're looking for your certificate of insurance proof from that contractor or business, or they add them to yours.
And I want to point one other thing out, because I have seen recently there are some companies that have multi-state workers' comp policies, but they have specific exclusions. So there are some companies that just say, well, we have a general workers' comp policy that's always covered us before, so it doesn't matter if we hire someone else. But I've seen certain states, New York specifically, among others, that are excluded from multi-state coverages. So you want to double check your policy anytime you go into another state to make sure whether you're covered or not.
Interesting. Good one. Good one. Perfect. Perfect. All right. I'm not seeing any other questions come in. This was a great session. Everyone stay tuned for the next Business Basics Friday session. We're going to go ahead and close out. Anyone who joined in late, and share our contact information again. And we are scheduled for next Friday at 12 Eastern. So stay tuned for the announcement of the next guest speaker. Thank you again, Scott, for your time today.
Thank you.
Just a final wrap up of anyone who joined in late of how people can reach you, then I'll close out and we will wrap it up.
Sure. Again, Scott Horton with Horton Law in the Buffalo, New York area, HortonPLLC.com. You can get me at Scott@HortonPLLC.com, or my phone number is 716-508-7748. Also happy to connect on LinkedIn or other social media platforms, but LinkedIn is great.
Perfect. Perfect. And thanks again, everyone, for joining us today. I'm Safi Russell, founder and CEO of SDR Consulting, Inc. I focus on helping mental health professionals reduce their concerns regarding tax and accounting. And you can find me online on social media at Safi Russell CPA, SDRconsultinginc.com. And you can also reach me by phone at 516-255-6603 to schedule a free 15-minute intro call. So everyone stay tuned for next week. Thanks again, Scott. Have a great weekend. Stay safe and Happy New Year to everyone. Take care.